All right, everybody, welcome back to the Crypto Rundown. Not joined by Pizza Mind today, but I'm joined by two of my best buddies, Brendan and Brendan, aka TiVo. So, Brendan, what's going on today, man? Beeman.
Yeah, I was gonna say, well, Brendan, we got two of us on here, so no, we're doing good. There's a lot happening in crypto still, so excited about all the great points that we get to talk about.
Yeah, cool. TiVo, clocking in.
Yeah, always clocked in, always ready to go, always ready to roll. Yeah, I don't know. It feels like we're in, like we talk about every week, or you guys do on the calls, is a little bit of a range bound, but it feels like we're getting to a point where we're making possibly a move.
Yeah, no, I mean, there's a lot of big things kind of unfolding in the crypto market right now. That is for damn sure.
And the overall market as we
Yeah.
speak. Jerome Powell just finished.
I feel like we're at a roller coaster point. Does anybody else feel that way? We're going up, we're like, things are good. Oh, and then it drops, and then we're up, and then we're down, and we're stuck in this range of getting excited, only to get disappointed, only to get excited again, and we're kind of like, all right, like what's really going to happen here?
Yeah. We had Ben Gertzel on the podcast yesterday, and I asked him his thoughts just on crypto market in general. And I was like, what do you think? Like, I know you're not like a trader or anything. He's like, well, all I'll say is I'm long volatility in the crypto market. That is one thing that I know is not going to be decreasing in light of all the uncertainty and the fear and that's being circulated right now. So I'm long volatility as well. I think that is probably the best way to capitalize on this market.
Yeah, and then volatility from a macro perspective. So I was watching the Jerome Powell, presser, and I guess the summary would be higher for longer seems to be something that's going to be necessary, and possibly even more rate hikes at a faster pace if the data stays strong. So the data's been pretty positive, right? But in a strong way, which means the rate hikes aren't working.
Well, it just means it takes more time, I think. He said that, right? It just takes time to see the effects of this all roll through and ripple through the economy. But what he did say is that you should expect to see the projections of the Fed in March, later this month, to be at a higher, they have their little dot plot that they issue 4 times a year where their projections for where the terminal rate is going to be. He said it's going to be higher than their December predictions. So it does mean that like their December predictions are getting a little adjusted higher. Now, could they keep doing that in their next meetings in September and down the line? It could be. It could be the case that they do that. But they are saying that they are going to continue down the path of high interest rates and higher for longer, right? The bond market's already starting to price that in, but they're now confirming it with Fed speak. So I think that's definitely worth noting. But definitely also worth noting is the GBTC news. A lot of people are starting to chatter that today went really well, actually, in DC, as Grayscale is in the DC Circuit Court of Appeals for the suing basically the SEC, saying that what they're doing, blocking a spot ETF. When a futures ETF is already approved, that's unconstitutional, it's illegal, it's X, Y, and Z. They're throwing the litigation at them, right? They're throwing the litigation book at them, and a lot of court watchers, are starting to speak positively about how the judges are responding in their rhetoric towards both lawyers that actually GBTC and Grayscale looks like it's throwing a good fight. So the betting odds and the betting man inside me would say, hey, this is a great time with a fundamental tailwind to long Bitcoin. Again, not financial advice. I'm not a financial advisor. None of us are. But if we get a spot ETF based off of the kind of court precedent here, that would be huge for Bitcoin. And if a futures one's already approved, it's like, what's the disconnect there? We'll see. What do you guys think?
I think that could set the foundation and the standard for so much more to be built. Like if that gets approved and they get this passed, that really could be one of those turning points, that foundation setting moment where others in this space kind of say, hey, we saw this get passed, we saw this get cleared. Let's kind of expand on this. Let's add to this. Let's build on this. And we could really see that after this does get passed or approved, especially in the years to follow.
Yeah. No, I think it's going to be very telling. I know the Ripple scenario is coming to a close here this year as well. So who knows with that? I haven't really been tracking the Ripple case, but there's going to be more court precedent set one way or another.
Yeah. So just from a DGen perspective, back in December when we did a rundown and talked about the discount between GBTC and Bitcoin. So at that point, it was about 3 months ago, give or take. And at that point, Bitcoin's up 30% and GBTC's up 40%. So interesting that it's held up.
I have seen that the discount for the GBTC discount has been shrinking. I think it was 50% last week, and now it's like 35% this week, which is showing that people are getting more bullish. If you buy one GBTC at a 50% discount, you're technically theoretically buying 2 for 1, because that should be redeemable for 1 full Bitcoin if that fund was open-ended, but it's been closed, and so that's what this whole lawsuit is. So who knows? We'll see how that all goes. But what else has been going on that's been catching your guys' eye?
I wanted you. Sorry. Before we move on, I wanted you to go over what you sent earlier. So Jerome Powell speaking today, a little unknown, and it coincidentally lands on March 7th, and you dug up some interesting data on March 7th.
Yeah, I didn't want to breeze over that. You're right. So there's a guy who I like. He runs a firm. I think his name's Ryan Dietrich from Carson Investment, and he's always got great info. So I follow him on Twitter, and he put out this chart today that showed March 7th, since 1950. Since 1950, March 7th is one of the worst performing days of the year in the S&P 500. Bitcoin's been pretty correlated, so it's a proxy that we're using to say that the market has historical weakness on a day like today, March 7th. And you could see this big matrix he put out. But you could also see that he said it's definitely the worst day of the month on average. And so we do have a period here, a cluster of a green weeks or days here. And then again in April, looks like there's a lot of green too. So seasonality-wise, we could be at the last kind of day of weakness moving into a season of strength, which seasonality would suggest. So you guys might want to keep this chart, and we could refer back to it throughout the year because it might come to bear. We could use these dates, mark them on our calendar. The big red days. Let's do a big crypto rundown and say, hey, how's the market holding up? I mean, holy smokes! Look at the 19th of October and the 22nd of October. I guess that's why they call it Bloody October. But anyhow, crazy. So we appreciate Ryan and Carson Investment Research for doing that. And I also saw that there was a huge amount of stablecoin inflows. We could pull up this chart as well, but this was circulating on Twitter as well. And this blue line is basically the cumulative balance in this time period since October. We're down basically lots of net withdrawals, $1 billion in net withdrawals of stablecoins. But this red and green is the histogram. So that's kind of like, the daily rate of change. And you can see that there's a very strong uptick from the bottoms, from the lows in stable coins getting deposited onto exchanges. That's really good. I mean, think about it. Why else would they be depositing a stable coin from their cold wallet to a hot exchange? It's probably to go buy a crypto, right? Whether it's buying Bitcoin, buying, an altcoin, leveraging maybe long or short a future, but typically people aren't that's not the main inflow of stable coins to go short, because you could margin your coins that are already on the exchanges. So I think this is a bullish sign. What do you guys give any credence to this? Do you see this and you think, oh, this is nonsense, or does it make sense?
No, I would say it makes sense. And we've seen a ton of activity, especially in the altcoin space, right? Because we look at Bitcoin the past couple of weeks, we say, yeah, it's been consolidating in the lower to mid 20,000s. But you look at the altcoin market and all of the different verticals are doing their own thing. Layer 2s are doing their own thing. AI tokens are doing their own thing. Metaverse and gaming tokens are doing their own thing. We have all these verticals that are moving somewhat independently. Yeah, they are following the overall trend of the market, and that's a cool thing to see. But they're also doing, I guess, in the shorter term, they're moving their own ways. And there's been a lot of volatility. There's been a lot of opportunity, short and long. And I think this just supports that idea that, yeah, we can notice this, like we can physically see it and say that it's happening. But when we're also seeing on-chain metrics like this come in, it just supports the idea that we're seeing a lot of activity and we're probably going to continue to see more of it.
Yeah, we are definitely seeing like on a short-term rolling basis, like a last month or 3 months, the correlations between altcoins and everything like definitely falling. Lots of spikes, idiosyncratic movements, which is good. I mean, that means the market's dispersing. And you have, we had a very narrow market where everything was going down all at the same time at the same speed. It was like 1-to-1. Now we have something that's much different. So that is a good sign of a trend shift, right? When you see those kinds of movements in a market, it signifies, well, what was happening for the last period of months or years, that's not happening anymore. So something is changing, right? The underbelly is changing. So you could expect a difference. Don't be married to what happened over the course of the last year and think, well, that's the trend, it's going to go down. Because as you can see, like actually a lot of the 200-day moving averages, you actually, we could bring up a chart of this, the 200-day moving average on the S&P 500, which is again big macro index. We broke above the 200 week. Let me go back. We broke above the 200-day moving average on the S&P 500 for the first time in a while and held above it. Okay, and we've held above the 200-day moving average in S&P for over a month. And there was another statistic, I'll have to send it to you guys, that shows, we'll pull it up right here, that shows that the S&P in the past, chunk of years, anytime it's broken above the 200-day moving average and subsequently held above it for a month, it's never gone back down below it. That's actually really important. Of course, history doesn't dictate the future, but it often rhymes, right? The future often rhymes with the past. And so we could see this again, S&P, again, strongly bouncing off that 200-day. And now Bitcoin and Litecoin and Ethereum and a lot of these coins have been strongly above their 200-day moving average, which is, again, going back to this conversation of correlations. Some of these altcoins are like way above their 200-day now. And so we do have, a very dispersed market, which I think is, good for trading conditions for sure.
Yeah, we're seeing a lot of golden crosses, right? That's getting people excited because there's mixed emotions about it.
200-day, 50-day crossovers.
Yeah, exactly. It's a great thing to see because for most of last year, the 200-day moving average was a resistance point for almost all of these cryptos. And now we're seeing the opposite. I mean, you look at some of these cryptos that are out there, Bitcoin, Ethereum, Litecoin, like you said, a lot of these that have broken over. And the cryptos and the altcoins that have retested the 200, the majority of the time it's been as a support so far. And that's a really great, I guess, bullish thing to see.
In continuation, there was another interesting scenario that unfolded, and that was another big lawsuit. But this time it was from two guys that are already getting massively sued. You had FTX and Alameda suing Grayscale for a bunch of money, basically saying that the fees that Grayscale was making really, FTX is entitled to them in some capacity, and Alameda. So that's pretty crazy. I have no idea how that's going to go. What do you guys think about one, guy on the stand right now versus another guy on the stand right now? Everybody's coming after everybody. The lawyers are the ones making all the money this season. That's for damn sure.
It seems to be that the justification here is that Alameda is trying to take the moral high ground, saying we want to get funds back to our customers and we want to do the right thing, and they're not allowing us to. And the only way that we can really offload our shares and our assets is if we do it on a second market, which is heavily discounted, and it's not fair to these people who lost our money, and we just want to be the good person here. And so you don't know whose side to take, really, right? Because we almost had two wrong.
It's folks who are caught up in this DCG Grayscale Genesis. The creditors on that side who gave them the money, and then the creditors on the FTX side. So it's creditor versus creditor, right?
Yeah,
crazy.
It's a wild scenario. They're trying to get people to take sides,
right? Lots of claims, and so it'll take decades to sort through all this. But moving to the thing that we were just bringing up, Mt. Gox, MT Gox, the exchange that blew up 10 years ago, that had millions of Bitcoin that were compromised, apparently are starting to do distributions of that Bitcoin, and cash equivalents and stuff at the time of the hack. They're starting to do distributions to their creditors now, but finally for the first time 10 years or so after that original hack. So folks that are locked up in these FTX and Genesis litigations and stuff right now, and the bankruptcy proceedings, strap in, because it ain't going to be, an overnight hit. That's for sure. But do you guys think that with this MT Gox, subset of coins that are going to start hitting the market, do you think that's going to be a bearish catalyst as supply starts to increase? Everybody thinks, the markets are going to get this whole new supply of Bitcoin. It's going to dump. It was funny, actually. We were on a podcast with Dr. Ben Gertzel yesterday, who I just mentioned. I'm going to mention him again because he said that's kind of a fallacy. It's like people think supply and demand is really, actively in effect in the markets. But sometimes it's just the belief of that. And like, if you have a huge amount of supply that hits the market, everybody thinks automatically that that's going to dump the price. But he says that's actually not what happens all the time, because there's demand sometimes that's latent that you don't see, that picks it up. And so when we see, and he's like, when you have a whole bunch of new tokens that are minted, people think, they're going to mint a bunch of new tokens, or they're going to have a bunch of unlocks, that's going to be bearish. But sometimes there's, bullish unlocks. So I think that this could be a bullish unlock, I think, is the long story short.
It'll get a lot of people who might have been sitting on the sidelines for an extended period of time. It's going to be their reminder saying, hey, you have Bitcoin again. You're now a crypto owner again. And I think you're right. I think a lot of this is an overreaction from people just assuming that it's going to be this bearish unload event when it doesn't have to be, right? It's just this idea that was made popular over the years, and now everyone's just kind of taking it at face value and saying, oh, you're right, it has to be this bearish event, when it doesn't.
Right. Yep. So
altcoin summer.
Altcoin summer.
Maybe some liquidity. I mean, it's like extra liquidity, right? If it's money coming from 10 years ago, I mean, are those people going to run away, like collect, like, oh, finally we got it, and run away? I mean, I feel like everybody's learned a lot in 10 years. So, whether they keep it in Bitcoin or transfer it, elsewhere.
And it's not like they're down, because they got Bitcoin 10 years ago. So it's not like they're like, oh, I'm taking this huge loss. Like, yeah, you had to wait, but now here we are 10 years later, and you've done, whatever it is, 100, 1,000x. And so that could, I don't know, that would make me excited. I would be like, man, I made the right call 10 years ago.
Right. And you learn from that, and you learn just from FTX. So it's like you have all the lessons learned. So if you were interested in the future of money 10 years ago, I mean, you have so much more knowledge and power to make your next move.
I think that's exactly right. And I think that's actually what Dr. Ben Gertzel was saying. You kind of expressed it another way and more eloquently than I had just did. But, just because there's these coins that are being unlocked doesn't mean they're going to get sold onto the market immediately, right? Just because shares become liquid doesn't mean they're going to be sold, right? Just because coins, holders get their coins, they could still hold them. And so the market even just pricing in, saying, okay, well, the potential for them to get their coins and, potentially sell, we're going to price the market a little bit lower in advance of that, because it's a discounting mechanism, right? But once that event actually happens and they don't sell, the market readjusts to where, it should be priced, because they're not selling. What was being priced is being sold. Trippy. But anyhow, we wanted to finally wrap things up with kind of what's going on in Hong Kong. In June, there is a bill or a discussion occurring about retail users in Hong Kong being able to trade crypto, which is super bullish. Crypto derivatives and all such things. So that would be pretty bullish for the markets if we got Hong Kong, because as Hong Kong kind of unveils new crypto policy, and as they unveil just financial policy and societal policy in general, it's typically like a testing ground and a little test net, if you will, for what unfolds in Beijing and in China more broadly, mainland China. So if things go well in Hong Kong, it could bode well for 1.4 billion other people in China. That would be retail users that would be able to trade crypto, which would make the markets a lot more liquid and and global. Now, the question is, at what point is that going to happen? How long does it take? There's going to be a lot of back and forth, but it's good that this conversation's happening, and it's different than what happened in 2021 when China came out and said, we're banning all crypto mining operations in China with a hard hammer, get out for XYZ reasons, and no crypto exchanges. Everybody moved out of China. And that was, I think May 2021. And, that was kind of the top of the market that really scared everybody out. So we're starting to see, again, the beginnings of a new narrative out of China and Hong Kong. So we'll see.